would be my third reason.
Yeah. And with regard to the factor that gold and silver are undervalued, one has to take into recognition the short positions held by big commercial banks.
Yeah, exactly. I think silver, by the way, is even more undervalued than gold. You know, the historical ratio is 16 to 1. Even though silver has been doing better recently, it's still at 55 to 1. 55 ounces of silver equal 1 ounce of gold. So I think that ratio is going to continue to fall. The problem with the silver, though, is that it's a little bit more volatile than gold. And as a consequence, silver may not be for everyone because of that volatility. But I am very bullish on silver in the long run. And the point you're making about the banks, there seems to be an awful lot of documentation out there that the banks are short silver. And now with the lawsuit that's been brought in the States and a couple of other things that have been happening, we'll see whether or not that short position starts to get unwound. The interesting thing is with all this publicity that silver has been getting, the hedge funds and some of the other big players now see the shorts as being vulnerable. So as a consequence, I think you're going to see an attempt by the big players to cause some pain with the shorts, and that could lead to a big short squeeze, which is actually something I've been expecting here for a few months.
Yeah, and then the ETFs will come under pressure too.
Yeah, I think eventually the ETFs will come under pressure. The issue being that there's a difference between paper gold and physical gold, and at the end of the day, I think you're going to see more and more people moving out of paper into physical gold. So that should put pressure on the ETFs, which is actually a good thing because I think it will mean the gold price rises as the ETFs decline, for the simple reason that even if the gold is in the ETF allows people to short. So for example, let's say John Doe buys the ETF thinking his shares are backed by gold, but his broker then lends those shares to Joe Bloggs. Joe Bloggs buys those shares. Both, the first guy and the second guy own the same shares, which are backed by the same ounce. Mm-hmm. So it's in that sense, it's a fractional reserve system. You have two guys thinking they're buying physical metal, but they're not. So to the extent that the ETFs shrink, that will mean paper gold, the opportunity to short gold, will diminish, and that will cause a rise in the gold price.
Yeah. GoldMoney only deals with physical metal.
Yeah.
And now you have a new service with related to ultrasonic.
Yes, that's right.
Can you tell me what this?
Well, GoldMoney is tungsten free. In other words, we've partnered with GE Technologies to test all of the gold bars within GoldMoney to prove that they're pure gold and that none of them have tungsten cores. There's been a lot of controversy over the past year or so that there are a lot of gold bars circulating around the globe that are gold-plated tungsten. Tungsten and gold have a very similar specific gravity. And so as a consequence, the volume of metal for both are approximately the same, and it's relatively easy to gold-plate a tungsten bar and try to pass it off as a pure gold bar. Anyway, what our number one objective has been from day one in GoldMoney is to always provide our customers with assurances of integrity that their gold is safe, and we try to do this in every way possible, or whatever our customers request. That's reasonable to do. So we examined very closely some of the different technologies that were out there to determine that even though we were following a chain of integrity that was very high in terms of assuring the quality of the bars, our customers wanted more, and we wanted to test the bars to make sure there were no foreign elements, tungsten or whatever, in the bars themselves, and that they were pure gold. We finally, after doing a lot of work determining which was the best alternative, we settled on this equipment from GE Technologies. We've now got that equipment in place at each of the 3 vaults that we use for our customers, and the gold bars have been tested. Some of the bars did not pass the test because they were older bars and they were used with more primitive refining techniques, but they did contain the gold that they said to contain. That was important. But I think the main thing is that customers of GoldMoney now know that the gold that they own and is sitting there in the vault, whether it be in Hong Kong, Zurich, or London, they know that they actually have pure physical gold.
Will 2011 be a good year for GoldMoney?
Well, I think, next year will probably be another good year for GoldMoney. We've been growing every year very rapidly. We're now safeguarding over $1.25 billion worth of metal for our customers. And we've got some new products and new services coming out that we'll be announcing in the months ahead. So I think, there's always going to be growth in GoldMoney for the foreseeable future. I think it will also happen too because people are looking for alternatives to national currencies. If you were able to deposit dollars in a bank or deposit euros in a bank and earn 8% or 9%, you have to think twice before giving up those dollars or euros and owning gold instead, because gold obviously doesn't pay any interest. But it doesn't pay any interest unless you put it at risk, I should say. But in this environment where you can't earn any money on your euros or your dollars in a bank deposit, there is no disincentive to owning gold. In fact, you're being paid to own gold because the euro and the dollar have negative interest rates. In other words, after adjusting for inflation, the purchasing power of a dollar or euro is less than what you can earn from it's diminished by the inflation, and you don't earn enough interest to offset that diminished purchasing power. So you're actually, in that sense, being paid to own gold because you're preserving purchasing power over the course of time.
Yeah. One last question. What is your opinion towards the gold policy of central banks from the BRIC nations?
I think you're going to see more and more central banks accumulating gold as we go forward. That, to me, really is sort of a mixed message. I want central banks out of the money business. Central banks have done a terrible job since they've taken over control of currencies. Under the classical gold standard, gold was the money, and central banks just managed the national currency to make sure that it always had the value of an ounce of gold. And paper was used as a money substitute because it was more convenient to have banknotes in transaction than it was to move gold around. And that worked very, very well for a couple hundred years. And then over the last 100 years, governments realized that the classical gold standard's rules were voluntary and they didn't have to follow them. They could start cheating on the system and create money out of thin air, which would give them more power to do things. And what we've seen over the last 100 years is that where governments have been involved in creating currency, they've done a very, very poor job because currency is always created to excess. Governments and politicians need some kind of external control on their ability to spend money, and that external control comes from gold. And when you ignore gold, you end up getting government spending too much money, which ultimately means the central bank steps in, turns that money into currency, turns that debt into currency, and you then end up with the hyperinflation. That's why I say that unless the U.S. gets off this path to hyperinflation, it's going to sooner or later get there, and I think we're getting there pretty quickly.
Yeah, but nevertheless, Brazil, China, Russia, India have a totally different approach to gold, isn't it? Is the case?
Well, they have a different approach to gold in the sense that they're acquiring gold in order to back their currencies, in the sense that they want more gold in reserve, and they're diminishing or reducing the reliance on the U.S. dollar for their reserve position. But I really want to see central banks out of the gold business. I just want to see money circulate the way it should circulate. Money is not handed down to us from government. Money is a creation of the free market. Like all wealth, all goods and services come out of the free market. Governments don't create wealth. At best they just redistribute it. At worst they actually destroy it. It's the free market that actually creates wealth and comes up with solutions to problems, not governments. So I really, and that's true with regard to money as well. So I really like to see governments out of the money business and let it just go back to free markets and private enterprise. You know, there's too much reliance on governments these days to solve everyone's problems. It's just, and that's ultimately moving us in the wrong direction. We should be looking to the free market to solve our problems.
Thank you very much, Mr. Turk.
Okay, thank you, Lars.